A mere 74,000 jobs added to the US economy, 45,900 jobs lost from the Canadian economy. What does all this mean for the dollar CAD? Joining me to discuss is Andrew Grantham. Andrew, US first, and 74,000 is a figure which some analysts have described as pathetically poor. Only 2 days after being confirmed, has Yellen's job just got yet more complicated?
It certainly has, yeah. The employment figures in the US obviously are a lot weaker than expected in terms of payrolls. Now, payrolls are always very volatile. Even in the smoothest of economic conditions, you can get an odd month which is very weak, an odd month which is very strong. But this does stand out as a very weak payroll figure. And what it does show is very much just an exaggerated trend. Example of the trends that we've seen in the US really since the recession ended.
One moot point in the last month's FOMC meeting minutes was the lowering unemployment target. The rate actually fell to 6.7%, but this is a result as having less people to count, as the participation level has decreased. What does this do to the significance of the figure?
Yeah, well, it depends really on why people are dropping out of the labour force. We have mentioned in the past that in terms of long-run demographics, the ageing population, that does tend to lower the participation rate in an economy. But the recent decline in participation does seem to be going well beyond what can be described or explained by those demographic factors alone. And so that does mean, I think, that there are people who are definitely out there who are dropping out of the labour force just because they can't find work and they are, seeking to do other things instead. So, we have seen in the last statement that the FMC now is saying that they need to go well beyond the 6.5% before they start thinking about rate increases. The surprise reduction in the unemployment rate to 6.7% will only support the hand of those people who wanted to see a reduction in that threshold to 6%.
There was a strong conviction ahead of the data release that it would be positive, but after the report, Treasuries certainly felt the effects. So will Yellen have to untaper the taper? And could this disappointment actually help soothe markets that the Fed has no need to exit QE quickly?
Yeah, as I said before, these payroll figures can be pretty volatile even at the best of times. So I don't think one data point is going to see the Fed want to undo the taper that they've already announced in the December meeting. I think what it will do is it will soothe markets a bit in terms of the fact that they now will not think that the Fed is going to kind of step up the pace of tapering. There was some speculation by some Fed members that maybe they wanted a slightly bigger reduction in terms of the QE program in that December meeting. I think that speculation will now be diminished. We still expect a modest withdrawal of QE as the year goes on, but very much given some of the data we've seen today, showing that the data is still on the mixed side, still very much tapering in modest steps.
Over to Canada, and their disappointing job report capped a week of generally soft Canadian economic data. Statistics Canada reported earlier this week the country's trade deficit edged higher in November as imports inched higher and exports stalled. Is there more going wrong than right in Canada?
Certainly it has this week. There's, as you said, the data has been very much negative in terms of the decline that we've seen in Canadian jobs today, and the very much weaker than expected trade report earlier in the week. We always caution that the jobs report in Canada can be very volatile, and we could always see this kind of offset by a surprisingly strong figure in the next month. So it is worth averaging these figures out. And also the trade data, you mentioned that exports did stall, but what we've seen actually is some kind of encouraging signs that exports to the US are picking up, and a lot of the weakness in exports, particularly over the last year, has been in exports to the EU, which in nominal terms are actually greatly affected by gold prices, which is a big part of which is a big part of Canadian exports to that region.
The data onslaught has seen the loonie drop to its lowest level in several years. So taking into consideration everything we've discussed, what is in store for the dollar against the CAD?
Yeah, well, we did expect the Canadian dollar to weaken against the US dollar in the first quarter of this year. We had a target of USD CAD at 110. Now, obviously, given have had a pretty poor week for the Canadian dollar this week, so we're getting pretty close to that target already. Our expectation going past that was for that better US growth was going to start supporting Canadian trade and growth in Canada as well, and that was going to be supportive for the Canadian dollar later in the year. We still see that as the case. We still see the Canadian dollar kind of stabilising on the back of those trends, but it certainly could, given the momentum it has at the moment, maybe edge past that 110 target that we had for the first quarter.
Andrew, lovely to speak to you once again. Thank you so much for talking this all through with us. Well, viewers, that's all from me for this week, but check out today's other programmes, including Targets in Focus, Press Review and Wrap Up. Have a great weekend.